think macro, it's kind of like been a mega trend where like every year it seems to get more into the general zeitgeist, or like where are we at in the Fed cycle? Where are we at in the capital cycle? How does that feed through to Bitcoin volatility, adoption? I don't think it's any secret that animal spirits are very high right now. I go to the chart every single day.
Bitcoin chart or
SPX. I'm talking just equities, kind of top level equities.
Yeah.
And it really is breathtaking that we just go up 30 basis points every single day since April. We work in a sector that has long been misunderstood and has had a ton of opportunity and people have written off. But I think that what we're seeing is the development of a true asset class outside of the development of a purely cyclical commodity cycle as it becomes more of a financial asset.
Hey, welcome back to the Mining Pod presented by CleanSpark. Today we're joined by Rory Murray of CleanSpark to talk about, well, the Bitcoin market, where he sees Bitcoin going through the end of the year, Bitcoin mining stocks, secular trends in Bitcoin, and the greater macro space. Before we get into it, I want to shout out to PubKey, best place in Manhattan to buy a beer with Bitcoin or a burger like Donald Trump. Be sure to join us in West Village and get a beer over here. Okay, a few words from our sponsors and then on to the conversation.
Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today.
Rory, welcome to the show.
Thank you so much. So really appreciative to be here. Well, thank you.
You got a new title, so I wasn't going to say it at the top of the show because it's VP of...
Digital Asset Management. I think before I was Director of Digital Asset Management. Now it's VP, Digital Asset Management. I'm not sure if there's any read through there, but but that's how I think we're styling it. And as we know, aesthetics matter.
They do. And the sign on the door matters. You know.
Yeah, it's still not my sign, and I'm not sure it ever will be. But just grateful to be in the building.
Yeah. Well, you're not in Vegas with everybody though, right?
I was last week.
Okay.
I was last week. I got back late Friday, early Saturday morning. But yeah. So what's interesting, people, depending on when and where you meet us, people think we're a lot of different places. Yeah. So obviously kind of corporate HQ is in Vegas. Yeah. That's where a lot of kind of the corporate functions sit.
Yeah.
Obviously, CleanSpark's big footprint was in Georgia and then Mississippi. And then Grid with the acquisition came into Tennessee. So it kind of looks like it kind of looks like Stonehenge kind of thing geographically. And then we have Wyoming. But yeah, so I sit in scenic Connecticut.
Okay. And you're the New York guy now because you are so close and you get to
New York
drive
metro
down.
area. Yeah.
Did they make you talk to all the bank analysts and drive up and down?
So I don't have to talk to. So I like to say I talk to traders, not bankers.
Okay.
Which is kind of my background. So a lot of the kind of banking relationships, capital markets relationships, are kind of driven out of obviously the office of the CFO with Gary, who's now also the president. And then Harry, manages a lot of those relationships, and Matt Schultz. But I try. There's plenty of kind of capital markets wizards in that kitchen, and I try to stay in my lane, which is kind of markets.
Talking to the traders. Okay. Any traders we should have on the show? We should talk about that later.
Yeah, there are some. What's funny about traders is they're really good in the chat.
Yeah.
And they're not necessarily as good like in person.
Yeah.
Really spicy in the chats kind of thing.
I can see that.
Yeah. So we'll need to, but I love talking to traders. And this is why, not to get immediately kind of off piece, which I know is kind of the
topic at the end of the day.
The whole topic is kind of off piece, but traditionally, like let's say you're at a hedge fund and you have a portfolio manager and an analyst. The analyst feeds the idea to the portfolio manager. The portfolio manager says, execute this trade. That trade comes down to the execution desk. Like, who are you talking to on the execution desk? It basically splits two ways at the banks, right? Traditionally, there's your kind of sales and trading, and then there's the actual trader who's like managing the positions. And so you have sales and trading who will manage hedge funds or corporates or whatever, and kind of they're market based. They can definitely speak that language, but it's ultimately at the end of the day, it has a sales kind of component to it, right? The traders are like the euro trader, right? Like the yen trader, like there's one thing all day long, and those guys live and breathe it. Those girls and gals and guys live and breathe it all day long, and I just love that energy. Like I've always been drawn to just not anymore, but like smoking a cigarette on the desk and just like sweating and just like totally unkempt and it's a type of energy that you still get with people that are like really directly interacting with markets and managing a risk book.
How does this look on the mining stock side? When we just compiled a bunch of this stuff internally so we can do more shows with actual capital investors as opposed to bankers for next year and leading into next year. And a lot of it is just like, the Vanguards of the world, the BlackRocks of the world. That sort of makes sense. But is there anyone else out there that you're kind of like, hey, this is a good trading name out there that's actively trading mining stocks or AI HPC stocks? We had Mike Alfred on the other day, and like he has his little liquid portfolio, which I think is a big liquid portfolio now.
It's not so little, right?
Yeah, not so little anymore. But I'm curious, like, how does that space look like? Is there any actual development on that side where people have like stood up entire shops dedicated to covering these things?
Yeah, I wish I knew more. Like, I'm sure that it would be surprising to me if there's not a sleeve of a pod out there right now that focuses in this space. But I feel like it's really kind of been like, there's, when you talk about coverage for an equity analyst, you call it TMT, right? Like, telecommunications, media, and technology. And like, nobody really covers telco anymore, right? Kind of thing. And so I feel like it's probably like slipped into a sleeve somewhere. But really who I think you do see cover it has been more on the credit side. Like, you see convertible desks, which are really conversant in the space. I think that's because there's been kind of the convertible wave last year, and I think people got really versed up in that. And you're seeing more of the equity analysts on the institutional side of the JP Morgans, like shout out Reggie Smith, JP Morgan, and kind of some other a number of other analysts that have been covering the space for a long time. But you don't really hear about it too much, like dedicated space investors, and it kind of feels like there's actually an opportunity for alpha in that space on a discretionary side for discretionary traders.
I mean, there's a lot of volatility, which people love for trading. Jonathan, maybe make a note. We need to boot up our own little
there's also
LP
alpha
fund.
Like there's stuff that's happening every single day.
Absolutely.
And if you are on Twitter in the mining mafia on Twitter, like, you got dudes who like, I don't know if they're retired
buying
or
satellite
whatever.
shots.
Yes,
like,
they're sitting on a beach in Thailand, and they're like drill, like enhance, right? And like running these super detailed like satellite imagery showing the changes. Like, now they're even going to they're like feeding it through Sora or whatever and taking it from the 2D to the 3D. And so there's an opportunity to be like really in the weeds on an individual stock, on the sector, on kind of the sector as it pertains to AI HPC. That I talk about this with Harry all the time, which is that just like, if we weren't doing this, like I might want to be doing that, because I feel like I've been in this space long enough. I've gotten my teeth kicked in. Like, I kind of know what to look for, how to read through the lines. And I just think that I'm actually surprised that with the size of the market caps that we've reached, and the size of the capex that we reach, and where we are in the cycle, that we don't see more of that.
I am too. So we started looking at this a little bit for us at Block Space, because we were interested in getting more alpha and then publishing it to the right channels. We have some hedge funds that actively reach out to us, chat with us, get feedback on shows, ask us to bring on guests, those sort of things. And then we started pinging them, getting some feedback on articles and headline content that they were interested in. Because you have like the big Bitcoin media accounts, and then you have the Reuters and Bloombergs out there. And between the two of them, like, there's a pretty good coverage of the space, like 90%. But there's about 10% of that stuff that gets missed. And so I think that's where like the Miner Mag and Block Spaces kind of popped up to try to cover that. And then the rest is just retail, like you said, where these guys are just like literally printing off satellite photos of like the Iron sites or your guys' sites. I was watching one this morning on YouTube. This guy was like printing off your guys' CleanSpark sites. And he's like, look at
Shout out that guy. Yeah. Like, thank you.
That's
like,
awesome. He's like, this is where the substation is, and this is where they're going to put. And I was like, wow.
Hell yeah, brother. Hell yeah. No, and I mean, to that end, like, to me, the model that I think you should think about is like a strategy.
Yeah.
Right? Like, where like you have the kind of like the media side, you've gotten that, but like there's a real differentiated pricing model. Like what, and like what kind of a, just a regular, and I don't even like to use the term retail because I actually think it's not capturing the enormous evolution,
the sophistication
of these investor bases, sizes of them, kind of the general, like how does Jeff Park put it? He's talking about kind of like the ideological investor side of that we're all kind of have these ideologies and these narratives and these things that we're all kind of attaching onto. But if, you know, that kind of long tail of person may only be able to pay so much, but if you get the right information in front of the right person, and it's all publicly available, you just have to go through the filings, you know, talk to the kind of the players and then connect the pieces. But that could be could be a really interesting premium offering for you. So
it's an interesting idea.
Something to think about.
Yeah, we've certainly been thinking about it. I think the execution side is hard. We've been working with a company called Synoptic that does, and shout out to them, synoptic.com. They do real-time data services. So you can buy an API from them for tons of different things. Like they have the Hamas-Israel conflict on there. They had the Iran-US conflict earlier in the year. They've had tons of different things, and we've been working with them on a data center
now, right?
All that's...
It's all good?
What do you mean all good?
Like everything's, I mean, I haven't heard anything about it in a while. I'm kind of kidding because it's amazing how quickly we move on.
It does move on fast. I don't know about like that.
We dropped 40,000 pounds of bombs on them overnight, and then we just haven't talked about it since.
Yeah, that's kind of crazy.
It's kind of crazy.
We kind of blew up their nuclear bunkers, and then we're like, whatever. Peace out.
Did we? I never saw the full readout on the, like, it was like, oh, we're going to get the full damage report, and it's going to come within a week. And I feel like a week's gone by.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
It's cool how you can build out those information services with these mining stocks because of all the public information's out there. For a quick anecdote, Canaan last week put out a note that they had a new investor bought 50,000 machines from them. I'm curious who it is. Curious if it's CleanSpark, but it might be somebody else. I know no one has confirmed it yet in other filings. And Canaan's shares went up 20% in the day. Just absolute crazy volatility to the upside. And that's great for people who are interested in investing, just to be at the right spot for that. So that's one thing that might dovetail nicely into talking about the market right now and how absolutely green it is. Like everything is ripping. And from your position as, you know, you've done a lot of stuff in macro coverage and then a lot of stuff in obviously direct investing with what you're doing now at CleanSpark. Give me like the 10,000 foot picture from your desk, and then let's drill into a few topics that you bring up during that. That's the main point, I think, for today's show is like, what is going on? Why is everything so green? And is that necessarily a negative in the Bitcoin viewpoint of the world?
Starting really top level, you know, obviously my background where I started my career was macro. And so that's a grounding that I'm always going to have. I think macro has gotten, I feel like it's kind of like been a mega trend where like every year it seems to get kind of more kind of into the general zeitgeist. And it's really, I think everybody's kind of macro now because I think everything it's kind of the barbellification. Everything is both totally macro driven and then also like these micro like memes and stuff that are happening. So how we ground ours, like there's me as a person and as an investor, and then there's like our desk and how we think about things institutionally. And so yes, we have to think about macro, like where are we at in the Fed cycle? Where are we at in the capital cycle? You know, how does that feed through to Bitcoin volatility, adoption, upside? How does that marry on to the investments we want to make, both in an absolute sense of like, is it wise to be allocating at what size and into what directions? And then also, how do we want to sequence that? How do we want to hedge it or not hedge it to the degree that we want to hedge it and monetize it? So, I mean, I don't think it's any secret that animal spirits are very high right now. You know, we were kind of talking about that. You know, I think you had kind of the bear market going into 2022 when Fed had to really accelerate on raising rates. So financial conditions got tighter. At the same time, we had a large impulse of inflation, and it was durable goods inflation and it was commodities inflation. So I think you had kind of capital goods got a lot more expensive, and then you also had commodity goods like oil. So your inputs to capital goods also got more expensive. So both just the top line on kind of the manufacturing process was gated, and then also the inputs on the commodity inputs got gated. That really took 18 months to kind of burn off. And we've been in a bull market since then, really kind of since, early to mid 2023. I think it's accelerated with the kind of turnover in the administration and some of that stuff, with obviously the hiccup being in April. And, every day I go to the chart every single day and I look at, kind of the 1 year, and it's just been
Bitcoin chart or
SPX. I'm talking just equities, kind of top level equities. Yeah. And it really is breathtaking that we just go up 30 basis points every single day since April. And we were kind of talking about this just before we popped in. It's, I think that why that we had that kind of downdraft in April, I understand. And things probably got a little bit too far to the other side, even if they had maintained kind of tariffs and kind of the intention at the rate that they thought. But coming out of that, it's okay. First, you have a kind of a resumption, you kind of bounce back. Then you have it's the classic kind of, I don't want to say taco, but it's are we going to modulate? Are we going to integrate? Are we going to negotiate? So you have that kind of impulse. Then you had the going into third quarter earnings. Market was, I think analysts were at like 2 or 3% earnings growth. Market came at like 9 to 11% earnings growth. So you had about 3 times more kind of, bottom line earnings growth. So then that got both priced in and then extrapolated out. Yeah. And now, but like this most recent leg, when we're getting into, and I'm not trying to call it any one specific sector, because we work in a sector that has long been misunderstood and has had a ton of opportunity and people have written off. But, when I look at the quantum computing sector, when I look at IPO markets, when I look at a bunch of different stuff, I can understand the bounce back. I can understand the earnings come in better than we expected. I can understand now let's forecast that forward to next earnings being steady state. And now we're getting into kind of like multiple expansion and just like going up on for reasons I can't quite put my finger on. Yeah. And you think about how does an economy grow, right? So how do you make more GDP? More people work the same amount of hours. Yeah. So more total people. The same amount of people work more hours, so the same amount of people work longer, or the same amount of people work the same hours, but they do it more productive. So you can do more people, more hours, or more productivity. And I guess we're pricing in kind of like, it just feels like we're pricing in a really long runway on consistent, steady state growth with a really tight feedback loop from CapEx into increased productivity. Yeah. That's getting a little bit beyond what feels traditionally like sustainable profit. Yeah. Right. On a broad basis. Okay. But how we break it down is that doesn't necessarily mean that we need to be responsive to the macro picture on any one given day, because we have a business, we have an operating business. That operating business has visibility, and we like to break it down between what we think are cyclical and secular kind of themes, right? Okay. And so to me, while I'm concerned from a cyclical perspective on some of the kind of tail ends that I'm seeing in animal spirits, I believe that there's a secular trend in Bitcoin inflows that we're going to continue to see. I think the adoption curve is intact. I think the ETF inflows are intact. I think we're going to continue to see development of credit markets. I think that that's going to continue to both deepen the total capital that can be invested in Bitcoin, and also broaden out the investor bases, bring more people in. So, I am cautious in the sense that I don't want to get caught there's two things. One, I don't want to get caught misallocating capital, chasing a return that we just need to be a little bit more thoughtful about modeling out. And the second is that I don't want to get caught kind of getting too bearish and giving up too much upside and trying to hedge things out too aggressively, when I still believe in this kind of secular trend that we're in for Bitcoin.
Okay, so believe in secular trend. So you don't see a 4-year cycle or anything like that. Something that more of like someone newer to the space would kind of understand.
4-year cycle is dead.
It is.
But I mean, look, like they said, the four most dangerous words, right, are this time is different.
Yes.
Here's what I see. I think that the total capital being invested in the space, I think that the institutional kind of approach, I think that the development of financial products, I think the integration with the base level economy, I think that the regulatory tailwinds, I think all argue for a super cycle. That doesn't necessarily mean compounding at 98% a year type of super cycle. I just think it argues for you're going to continue to get this kind of Brownian motion, but with this upward drift over time, rather than the aggression of the same type of kind of, I think, ups and downs, specifically within the Bitcoin space. Just because I think that the secret's out. I think that people are allocated to it. I think that I think that the velocity of those flows goes down to some degree as they go into ETFs, as they go into credit products, as they get integrated into kind of the funding of businesses at base levels. There's plenty of risks. There are certain treasury companies that I think are very strong. There are certain treasury companies that, I think on the tail that I worry about their strategy over a cycle. And I think that will continue to drive cycles. But I think that what we're seeing is the development of a true asset class outside of the development of a purely cyclical commodity cycle as it becomes more of a financial asset.
Let's do a choose your own adventure podcast style. Okay. So for you sit at the intersection of both larger markets, since you're basically running this derivatives trade with your giant hodl at CleanSpark. And then also you sit in the intersection of AI, HPC, Bitcoin mining, compute. Let's pick one of the two rabbit trails to go down and talk about it more. Which one's like more appealing to you?
I mean, look, everyone's excited about AI and HPC. I've always been a markets guy. It's the thing that gets me up in the morning, and I think about when I'm going to sleep, and that's it's really what I think about. But I think what might be interesting is how do those start to map onto the AI HPC market? How does it start to look like a commodity market? And I haven't seen the odd lots yet, where I think Don Wilson of DRW talks about building a GPU market, but I get the idea. So maybe they're not. Maybe the two shall meet one day.
It seems like they have in a lot of ways. But looking at the larger macro perspective, we have, like you said, credit markets becoming more interested in Bitcoin every day. There's a new Bitcoin-backed loan product that's popping up, and a lot of these more institutional investors are pretty happy to put their Bitcoin to work. That's pretty cool. The ETF flow is really strong. Last week was the largest inflow ever recorded by CoinShares, which is just absolutely nuts.
Right. And I think across all digital asset markets, it was the largest ever, right?
Yeah. It's
that's saying huge. Something. I get that we're at there's also animal spirits, at play here, but that has effects over time, right? And we talked about it. And once you go into an ETF, yes, you can come back out of it. But in general, the type of investor that's allocating at the edges to these products has less velocity in their flows than somebody who's trading on the third roll up coming out of Arbitrum or something.
So new phrase on Wall Street is the debasement trade. People rolling into Bitcoin. I mean, it's the same trade that we've been making for
I'm
years.
just laughing because like we've been in this trade for like 10 years, man.
Well, explain it for people who aren't or don't know the new phrase. And then obviously it's the same thing that people who probably been watching this channel or show for 5 years know about already. Because
I don't think it's going to be like news. Like but
the phrase is news, right? Like that Wall Street cares about this.
Breaking the monetary base of the United States has been increasing at what some might call an unprecedented clip. The United States has two ways to balance their budgets and pay off their debt. One is through austerity, that is to control our spending, to tighten our belt loops like a family does, and to pay down our credit cards. The other way is to inflate away the debt via money printing, because the value that you have to repay in the debt is lower for the creditor, for the debtor, rather than the creditor, as the total monetary base increases. And so as the United States is the debtor, having borrowed many, many trillions of dollars, and also controls the money supply and the reserve currency of the world, it would seem that the game theory is that the debtor who owes all the debt and controls the currency that it's repaid in may choose, rather than tightening their belt and to go through austerity, they may choose to inflate the value of that away. And so that creates what's called debasement, right? And so that means that if there's $100, and it's a very simple example, but if there's $100 in an economy and it takes 5 of them to buy this coffee, and we print $200 in the economy, well, the coffee is the same price in what's known as real terms. As now it costs me $10. It's 10 out of 200 instead of 5 out of 100. But let's say that I borrow $100 from you, okay? And there's $200 in the economy. I owe you $100 back, and then I print another $100. Now there's $300 in an economy, and I only still owe you the $100 back, and I pay you back out of the 100 that I printed. Or it's a lot more. Obviously, as you go throughout the flows, they kind of trickle out and disperse out. But that's the general idea, particularly as the closer that you sit, and there's what's known as the Cantillon effect, which is the one that really, really boils
near and
my
dear
blood.
to your heart.
Near and dear to my heart, right? Which is that the closer you are to the levers of monetary printing, the more you're going to benefit from that. It's not an even distribution of inflation throughout the economy. So the person that prints that money is able to immediately repay their debt. Now there's a higher total kind of price level throughout the economy that everybody suffers from. And the further you are down in that, the more you suffer from the negative effects of inflation rather than the positive effects of kind of increased monetary base and velocity.
That was perfect. That's a whole clip right there. When we talk about that debasement trade, I think the thing that comes to mind, 1 is Bitcoin, obviously, but 2 is gold, and gold's been on a rip this year.
But that's like what we're talking about here, right? Which is that, like, what is priced?
The alternative.
Yeah, what are the alternatives to things that are priced and repaid and that either suffer from a higher monetary base, or are subject, or can maintain real purchasing power versus the US dollar or any kind of hyperinflating currency. Gold. So, and I really think people are talking about the twin turbos of gold and Bitcoin, right?
Yeah. And I think this like kind of bleeds down to different places. So in any sort of setting like this, you have like the zero hedge mind, where it's like, okay, where is like this Cantillon effect impacting markets? Like what's getting bid up, what's not? And we've had, the last 15 years, we've had the Fed and others kind of picking markets where they're deploying this capital in there, and we've seen different parts of the market kind of pick up. And then we've had the zero hedge mindset again, like this one's hotter than this one. Fed money is impacting that. That's where the flows are going. And I think this year now, the idea is that with AMD, NVIDIA, and some of these other stocks out there that are related to that, like that's where the flow of funds, that's where the tip of the spear for the inflationary assets is. Do you have like any belief in that? Like, and do you find any credence in that? The alternative, I'll actually let you answer, but I have an alternative argument for where that could be coming from. I'm curious because like our space completely intersects.
Those are real flows though, right? Is the thing. Like NVIDIA, AMD,
Yeah.
Micron, like C-Tech with the memory. Like these are like everybody uses the pets.com example, and kind of what's funny is that pets.com, we all order our pet food online now, and so they were right, but there really was no money there. Like, I think Nvidia was like a $4.5 trillion company when I looked at it this morning, and then it went up further from there. But but there is real investment, real flows. There's real value that's being created throughout the economy. People laugh about both the AI bubble and the CapEx. And at the same time, like, the internet took a long time to trickle through. I think like kind of our social layers. Yeah. But like, and Tom Keene is one of my all-time favorite financial personalities. But I know he always jokes about how he uses Perplexity. And I remember 2 or 3 years ago now, I was sitting at this cafe, like near where I live in Connecticut, which is kind of out of the way. And there's like a group of like older like people that come in the morning. They always have their coffee. Like they drive their like classic car. They have their coffee. Like they're all kind of retired. They're hanging out. But they're what you would generally kind of assume would be like later adopters. Yeah. And this was like late 2022, early 2023. We're not that far into this. And they were just talking about like ChatGPT and the AI thing, and that they used it, and the value he'd gotten out of it with like his business and like stuff like that. And I think you're seeing an adoption curve that's much faster and much faster. So I think that in any cycle, in any CapEx cycle, you're going to get to like the market, it smells blood, which is that there's a there. Yeah. And it's not going to stop until you get to some type of misallocation of capital. But I don't know, that to me is like, it's not what I'm super concerned about from an ultimate like return on investment, at least in the sense that it's going to create a lot of societal benefit.
What keeps you up at night?
The thing that I think a lot about is like, what's the total addressable market on digital ads? And like, it's not an area that I have a ton of expertise in. I've never been like deeply embedded in the tech or media ecosystem. Yeah. And so I've kind of been surprised over the last couple of years that the total amount of like digital advertising dollars and the return on those dollars and the people bidding to put them in front of other people, it seems like this just relentless trend. And I wonder, like, is there a limit for how many total hours we can spend on our phone or scroll? Yeah. Is there a changing in the algorithm? Is there a sea change in how society or a Butlerian jihad, or even a very, very, very light one, right? Yeah. That like kind of like takes that sea change back. And I think there's I think the Steelman argument on this that I heard from the ETF, one of the great Eric Balkanis, who's like the ETF analyst at Bloomberg, him and I think Jay Seifert. But Eric Balkanis has been great. He's like, hey, we talk about this like it's very narrow leadership, like it's one company, but these are really 120 different companies because they've rolled up so many different companies. They have so many different verticals. So like the leadership is not as narrow on an equities basis, but I also feels like so much of the CapEx build out and generally when you go into a heavy CapEx cycle, industries get discounted because the market wants to see the value of that CapEx in 3 or 5 years, but they really kind of beat you up ahead of time. And it's one, to make sure that you're not misallocating that capital. 2 is that it lengthens kind of the payback periods. Yeah. 3 is that there's a lot more execution risk when you got to go from like sand on the ground to like full data center, GPUs, cooling systems, water, like all of that. And you can use that for telecom, broadband, railway, whatever, right? But they haven't done that with these companies because they've also had the twin turbos of these digital advertising dollars. And so like, if and when we ever get a little bit of a hiccup in that, I just worry that that finding that equilibrium again could be painful.
Rory, thank you for joining the Mining Pod.